All right. Give me a few more minutes, folks. Listen, folks, roll in here. All right. Let's get it. Yo, 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 yo. It's your boy, the insurance junkie, your fiduciary fella, the all-star buzz of Alonzo Hall, your social media insurance broker, and I've returned today to Weapons Up on Your Head with another ADH Wealth solution. So, as you can see, the title of today's video, or today's second live shit, I should say, is life insurance is not an investment, but it is an asset. Before I go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. So, as we proceed to give you what you need, let's take a look at some behind the scenes shit that I'm going to show y'all. Of some stuff that I got going on, right? Because there's some things that are told to you about life insurance. And you got the people who are telling you all one product is better than the other because they're different, so you want to compare them and this, that, and the third. And realistically, there's no need to compare them, or because they're existent for a reason, right? So each one exists for a particular reason, and that reason is to be used for what it is, right? So however you're going to use it is how it's going to be used. But I want to show you a couple of things here that are real life cases of people using life insurance for some of the things that I've talked about. Because if you haven't seen them, actually done, you may think they're not possible. Or, well, why aren't more people doing it? Because more people don't know about it, right? So that's why. Yeah. Give me 1 second here. I'm just sending this out to a few folks. This here. Prince Pierre, what's going on? Corey, what's good? Give me 1 second, y'all. I'm just sharing that out. Rael, what's popping? I was just about to share it to you. All right. So now let me get on with the show, y'all. All right. So today in Prince, you have access to all this shit. So, I went live earlier with my blunts and books and shit. And, I went over some articles, ironically enough, that were approved by a company. But since a lot of this stuff is able to be client facing, I'm going to go ahead and give it to y'all with clients. So it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, your social media insurance broker, returning today to weapon tap on your head with another ADH wealth solution. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. So let's get it going. So I'm going to start off by sharing my screen with y'all. Hold on, my cat's trying to jump on my TV. Get in. All right. Let's just share the entire screen for now. So I'm going to go to my what do you call this? My back office. Hold on. My cat is really all lost his mind. Dude, get in. You wanna say hi to the world? Hmm? Hmm? Sorry about that, y'all. So this is my back office. So now in my back office, I'm gonna take y'all to something that's crazy. Right? Take y'all here. Take y'all here to the Visual Resource Library. So this is where I learned a lot of my high level concepts. So as you see here, for financial professionals, you'll see here we got a lot of shit that we have access to. So we have planning concepts, fact finders. So what is fact finders? This is what you get when you sit down with a financial professional, right? So for example, we have for example, we have a budget organizer, a comprehensive fact finder, a comprehensive confidential fact finding questionnaire. So this is the short version. This is the long version. We got a key employee fact finder, right, for business needs. We've got disability income needs for personal needs, authorization to provide employee benefits, right? So that's in fact finders, right? So we're not going to go to those right now because, like I said, I want to show you real life stuff, right? So first, we'll look at concept pages, right? So I have, if let's say you want to look at things like charitable trust. Rael is always talking about charitable remainder trust, right? So let's look at charitable trust. So they have a presentation of it. Charitable gifts why, charitable gifts how, charitable gifts tax benefits, split interest, charitable trust, charitable remainder trust. Let's look at charitable remainder trusts in action. Right? This is the shit the rich don't want you to know. This is don't mess with whole life insurance. None of that shit. Because I didn't understand it could do all this shit. How does the charitable remainder trust works? The donor transfers the donated assets to an irrevocable charitable remainder trust and receives the current income tax deduction based on the value of the charity's remainder interest. 2. The non-charitable income beneficiary, e.g. the donor, spouse, or family member, receives a stream of income for life or a term not to exceed 20 years. At the end of the income period, the charity receives the remaining trust assets. Right? Charitable remainable trust variations. Gifts of remainder interests are deductible for federal income tax purposes only if made to one of the following: a CRAT or a charitable remainder annuity trust, or CRUT, a charitable remainder unit trust, or pooled income fund. Right? Quick one pager, and it can be shared with clients. So that's why I'm sharing this with y'all. Right? Let me check the comments here. All right. So let's go back to the main menu here. Right? Again, let's go back to another concept, because these are things that are done. These are concepts, right? So these are personal planning, financial insurance needs, life insurance and retirement. Let's look at reverse mortgages, right? What is a HECM versus a HELOC? I didn't know there was something called an HECM. I've heard of a HELOC. Let's see. HECM advantages and requirements. What is an HECM? Home equity conversion mortgage are insured by the Federal and Housing Administration, which tells. So stuff like this, y'all. Hold on. Let me bring myself up here. Stuff like this, y'all, is what separates the boys from the men when it comes to this financial services stuff, right? This is the game, right? This is the nitty gritty. This is what the wealthy are learning. And this is why you got people right now online. Somebody dropped the ball and told a regular person about infinite banking, and they told everybody. I got told about infinite banking back in 2010, tried to tell the hood about it, and they laughed at me. Life insurance, get the fuck out of my face. Now everybody, are you well? Are you well? Are you well? Infinite banking. Right? Now I'm talking collateral assignment. Everybody, get the fuck out of my face. Right? Till I sent my principal, till I sent Charles something about David Kinder, who Tom Love wrote a fucking book about collateral assignments. So the mortgage guy told me, nah, dude, that don't, yeah, nobody does that. Why is the rich guy white guy writing a fucking book about it? Right? So let's go back to HECMs, right? I didn't know a home equity conversion mortgage wasn't an existing thing. So these are things that if you don't know, you can ask your mortgage loan originator now. So home equity conversion mortgages are insured by the FHA, which tells HECM lenders how much they can lend based on a homeowner's age and the value of the home. The FHA, which is part of the United States Department of Housing and Urban Development, guarantees that HECM lenders will meet their obligation under the loan and insures lenders against loss if reverse mortgage payments exceed the equity when the home is eventually sold. HECM advantages. HECM proceeds can be used for any purposes. They provide considerable flexibility in how the funds can be paid to you. They're widely available, and generally speaking, they're the least expensive reverse mortgage that can be used for any purpose. However, you must be 62. It must be your home residence, and you must own the property outright or have paid down a considerable amount of the mortgage, which means more than half, at least 51%. The home must be a single-family residence, a unit occupied by the borrower in a 1 to 4 unit building, an FHA-approved condominium, a unit in a planned unit development, or a manufactured home that meets FHA requirements. Co-ops and mobile homes aren't eligible. You can't be delinquent on any federal debt. You must have the financial resources to continue to make timely payment of ongoing charges such as property taxes, insurance, and any HOA fees. Your income, assets, monthly living expenses, and credit history will be verified, as will your timely payment of real estate taxes, hazard, and flood insurance premiums. The property must meet FHA minimum property standards, but reverse mortgage proceeds can be used for required repairs, and the homeowner must receive free HUD approvers of reverse mortgage counseling. So that is an HECM, or a home equity conversion mortgage, which is something I was unaware of. So let's see what else we got here. Business planning, buy-sell planning, right? So let's look at buy-sell agreements, right? Insured buy-sell for sole props, right? Because a lot of people are sole props. And you don't have to be just a sole prop. You can be a corporation, and LLC, so on and so forth. Let's view the presentation, right? So here's how an insured stock redemption buy-sell plan could work for you and your business. So here goes the sole prop and the purchaser. The insured is the sole proprietor. The owner is the purchaser, and the beneficiary is the purchaser, right? So the premiums for the insurance are paid by the purchaser, which is the company. But since you're the sole prop, you're the payer of everything from the company. So the sole proprietor and purchaser enter into a buy-sell agreement in which the sole proprietor agrees to sell and the purchaser agrees to buy the business for an agreed-upon price. The purchaser buys sufficient insurance on the sole proprietor's life to purchase the business and pays the premiums. The life insurance policy on the sole proprietor's life is owned by the purchaser, who is also named as the beneficiary. 4. Income tax-free death benefit, purchase price, and settled and distributed to. So 4. At the sole proprietor's death, the life insurance death benefit is received free of income tax by the purchaser, who is the policy owner and beneficiary. The purchaser used the proceeds of the life insurance policy to buy the business interest from the sole proprietor's estate for the purchase price agreed upon in the buy-sell agreement. After settling the estate, the executor or administrator distributes the balance of the estate to the sole proprietor's heirs. I know sometimes they say, Queens of Virtue, what's going on? I know sometimes they say this shit is boring, but to be honest, this financial shit ain't really that boring when you look at it. Niggas be like, I want to buy a house. So again, Rael, if you still here, this next thing I'm going to show you, you're going to definitely like. Queens of Virtue, what's going on? I'm not on my YouTube channel right now. I can't give you a wrench, but when you come back, I'll give you a wrench. Or when I come back on YouTube. So, now, outside of that, I want you to look at what we call specimen documents. So, specimen documents are to help your attorney's client or your client's attorney prepare insurance-related documents, right? So specimens. So these are real life things. So again, non-trusted proprietorship buy-sell agreement. Where's that sole prop buy-sell? Corporation option, corporate purchase. I already talked about ILITs, irrevocable life insurance trusts. Fuck it, let's do it with a buy-sell agreement, right? Let's just click one. So a trusted proprietorship buy-sell agreement. So this is actually a specimen. This is a document that will be filled out by an attorney. So if we at the insurance company already have the fucking documents, don't let somebody tell you it can't be done. Because you could just call up the insurance company and say, hey, I need a buy-sell agreement document because I want to set up a buy-sell agreement insurance policy. Now, the insurance agent might not fucking know about it himself, but if the insurance agent doesn't know about it, you ask him, hey, do you have a sales manager, or can you call corporate and ask? Right? Let's see. Executive benefit planning, right? So let's look at let's look at collateral assignment, right? American Bankers Association, right? Because I'm always talking about, and they have different forms of collateral assignment, if you'll see here, right? So one is collateral assignment, or they call it the split dollar agreement, which is employee owned, right? So this specimen collateral agreement assignment split dollar agreement. So this is employee owned. On September 11th, 03, the Treasury Department issued final regulations for split dollar life insurance arrangements. These regulations provide tax rules for split dollar life insurance plans that are entered into or materially modified after September 17th, 2003. This specimen agreement reflects the final split dollar regulations and, as such, applies only to new split dollar life insurance arrangements or existing split dollar life insurance arrangements materially modified after September 17th, 2003. Right? So these are legal documents. Specimen collateral assignment split dollar agreement. Right? So agreement made this day of blank between blank corporation and formed under the law of state of blank, hereinafter called the corporation, and name of employee, hereinafter called employee. Whereas the employee has been named employed by the corporation since blank and makes a valuable contribution to the earnings of the corporation. And whereas the corporation is willing to assist in the employee in creating a life insurance program for the benefit and protection of the employee's family through a split dollar life insurance plan. Well, now, who the fuck been telling you that life insurance ain't an asset? Hold on, I'm gonna go ahead and Queens of Virtue go on my YouTube through my phone and give you a wrench. My YouTube through Country Hustle, what's going on? I'm gonna give you a wrench too. All right, so there we go. Fuck it, I'm gonna watch it myself. But they keep telling you this life insurance isn't. You don't think these are term life insurance policies when you're getting split dollar insurance and they're talking about taxable treatment, right? Let's go to Google right quick, right? Life insurance is not an asset, but let's look. Let's look. Democrats against life insurance. So it says here in the Washington Post. Let's look at the Hill. The Hill says Democrats blast life insurance plan as tax breaks for the rich, by Lauren Irwin. February 21st, 2024. This is only 3 months old. So what are they not telling you about life insurance? Because as far as I can see, it's an asset. Democrats on the Senate Committee on Finance took aim at private placement life insurance in a report released on Wednesday, saying specialized plans amounted for tax breaks for the wealthiest Americans. So basically, you can use life insurance as a way of tax avoidance. Apparently, that's what the rich are doing. But anyway, let's get back to this here legal document that's talking about life insurance. So, whereas the corporation agrees to participate in such plan as provided for in this agreement, and whereas the corporation agrees to loan the employee amounts to be applied to premium payments on a policy described in Exhibit A attached here too. I'm going to show you guys a real life example of something like this, right? Let's go. What's that guy's name? Michigan football coach. Jim Harbaugh, right? Jim Harbaugh. Salary life insurance, right? The contract outlines that Michigan will pay $2 million a year for 7 years. It's a $14 million loan to pay for Harbaugh's life insurance. Wait, what the fuck does that say? Did I just go to Google and type in Jim Harbaugh salary life insurance? They just said the contract outlines that Michigan University will pay $2 million a year for 7 years, which is a Tamra 7 pay. It's a $14 million loan to pay for Harbaugh's life insurance. We know that he will owe the IRS what they call an imputed loan interest by receiving that loan as a type of compensation. But that's more on the tax side. So Jim Harbaugh's contract shows the value of life insurance. This is from 2021. But he did it back in 2016. ESPN talked about it. ESPN talked about it, but you know about his stats. But how come you don't know about the article that Dan Murphy, ESPN staff writer, wrote about his life insurance? Whoa. Whoa. Kind of crazy, right? Ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. So now I just Googled it, but I want to show you again. So it just said here, the corporation agrees to loan the employee, right? The corporation is willing to assist in the employee in creating a life insurance program for the benefit and protection of the employee's family through a split dollar life insurance plan. The corporation agrees to participate in such a plan as provided for this agreement, and whereas the corporation agrees to loan the employee amounts to be applied to premium payments on a policy described in Exhibit A. Here goes Exhibit A. In addition to paying a $5 million salary for each of the remaining 6 years on his deal, Michigan will also loan. Hold on. In addition to paying a $5 million salary. So this was by Dan Murphy, an ESPN staff writer, August 17th, 2016. Right? Just like I showed you. Hold on. Just like I showed y'all that last paperwork. Right? Because we love the lifestyles of the rich and shameless. Right? We love the lifestyles of the rich and shameless. Right? Hold on. Let me go back to this. We love the lifestyles of the rich and shameless. Hold on. Let me turn this virtual background off, right? Right? We love the lifestyles of the rich and shameless, right? Hold on. This is a financial advocacy podcast. What's going on? Lifestyles of the rich and shameless, right? Don't just see the lifestyle. This is the reality of it. All this amounts to $4,000 worth of work. These 3 pages. Anyway, where was I? Let me make sure. Okay, you have a wrench here. So this is the Financial Advocacy Podcast. Ladies and gentlemen, make sure you follow this if you are a financial professional, especially. If you are not a licensed financial professional, still follow this podcast. This is my friend, the illustrious David Kinder, who I was telling you about. Dave, I am talking about different collateral assignments. I realized in just spending time with you guys at the Breakaway League, I'm getting into concepts that are well above the average person. I was actually talking with Charles, my principal, and a mortgage guy because we're having a webinar June 7th. I actually need to promote it here too, but we're having a webinar June 7th, and I wanted to have it on the collateral assignment. The mortgage guy wasn't really comfortable having her on the collateral assignment. So I want to show that there actually is something called a collateral assignment, but there are a few different. One is split dollar, like David actually just put here in the link. And if you'll see there, that's David Kinder. He has a blog. David, if you don't mind, you can also put your website there. This guy is a wealth of knowledge. He actually helped me to understand a lot of stuff. He's a white guy. He's one of my white friends. And he actually is MDRT qualified. And one of the charges of white MDRT producers is generally when they find a black MDRT cloth producer, take him under his wing or give him a little knowledge, because we also don't really have the network of that many wealthy individuals. Collateral assignments. Yes, I've actually been talking about this on TikTok because what we call LLC Twitter has been running around. Hey, get a EIN, get a car with your EIN, and it's crazy because they get all these people to get all these liabilities. They get $150,000 in business credit and go get a Bentley. What the fuck? How are you going to pay that Bentley off? You're not even doing business, right? But collateral assignments are good for business loans as well. Ironically enough, the SBA requires you to get a life insurance policy to get that business loan. Thank you, Rael. Yeah. So, and then what's funny? I actually sent to because David The other day on Facebook, you posted Tom Love's book, which I intend on getting, that's talking about collateral assignments. And I was like, hey, Charles, this is funny. They're talking about collateral assignments. He was like, oh, send me the link. I was like, I want to fucking talk about collateral assignments. You know what it is? Everybody's talking about infinite banking right now, David. And so I'm trying to be ahead of the game. I was talking about infinite banking in 2010. Unfortunately, I'm not a great marketer on social media, so I don't have millions of eyes on me. So now infinite banking is the hottest thing like sliced bread, but I'm on to things like collateral assignments. And as you can see, since 2016, since at least 2016, football teams or colleges have been on things like collateral assignments. So let's get back to this again. In addition to paying a $5 million salary for each of the remaining 6 years on his deal, Michigan will also loan Harbaugh $4 million in 2016 and an additional $2 million for the following 5 years to pay the premium on the life insurance policy. The first $2 million loan was made in June on June 3rd, according to records obtained Wednesday via Freedom of Information Act request. Each additional $2 million payment will be made in December starting later this year. As long as the insurance policy stays active, Harbaugh does not need to repay the loan until he dies. At that time, the university can recoup its original investment, and the rest of the insurance payout will go to whomever Harbaugh chooses as his beneficiaries. Should the policy be stopped at any point, Michigan would still be entitled to get its money back from the insurer. The deal ensures that Harbaugh's heirs, should he die, while Michigan is paying for the policy, will get no less than 150% of the premium that has been paid, increasing the payout by $6 million in 2016 and $3 million each successive year. The 150% clause protects the university as well. Harbaugh is allowed to borrow against the policy while he is living, but has to keep at least 150% of the premium value untouched, which gives the school a cushion to make sure it gets its investment back. Harbaugh's original 7-year contract with the school allowed for parties to sit down and discuss additional compensation after the coach finishes first season with the Wolverines. So, again, legal documents. Again, real life applications, right? Says so my thing here, David, is with collateral assignments, I'm looking at using collateral assignments to acquire a loan. So I had a client who went to a bank and asked if he could use, he also has, $750,000 in an annuity, but he asked if he could use either his life insurance or annuity to acquire a mortgage. And I know you can actually use your life insurance as a collateral assignment to acquire a mortgage, which is what I wanted to talk about June 7th, but the guy that I'm talking to about with mortgages is uncomfortable talking about collateral assignments. So if he's uncomfortable, I'm not going to force him to talk about something he's uncomfortable about. I'll keep it substantially simpler because your average American isn't even ready for that information. But David, if you are willing to, I'll gladly do a webinar with you. I have the Zoom and I'll post it here. I won't even charge people to come to it just because you're doing it. Normally I charge $3,000 a person. No, I'm just kidding. But I have been considering, and I've actually been told by a lot of my following to charge money for this. And a lot of people online on social media and TikTok, they're making more money off of the sale of their webinars than off of their pen. I'm a guy who would prefer to make it off of my pen. But just for shits and giggles, I just want to go to Google and see here. So I was saying, from Google, can you get a house using life insurance, right? And so here from Investopedia, right? Da, 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 da. So where are we here? So the bottom line, life insurance can be used to buy a house. You can use your policy as collateral for a mortgage loan. right? So the guy's like, nah, that's not, nah. I'm like, yes. Yeah, it's not common because a lot of people don't do it, and most people aren't used to bringing collateral for a loan. And then he's like, oh, well, look at the language. It could get you qualified for more. It could get you lower rates. Well, why wouldn't you go for everything possible to get you lower rates? If it doesn't get you lower rates, big whoop. But if it does, then it's a benefit to bring the shit there. It's just a few extra pieces of paperwork he has to sign. Right? Excuse my language, David. You know I'm unorthodox. I curse, I spit, I listen to gangster rap, right? But that's what I want to talk about with collateral assignments, right? I didn't want to talk about the split dollar, but I'm sitting here, I'm showing actual specimen documents. So the following are specimen documents only. The actual document used in any particular case must be prepared by a qualified attorney and modified to reflect the unique facts of the situation and to comply with the applicable state law, right? But these are the things that are pretty cool here. So that was one collateral assignment. Let's look at another collateral assignment here. So we have the split dollar agreement with third-party assignment, or third-party ownership. So specimen triangular collateral assignment split dollar, right? So same rules apply to 2017, blah, 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 right? So made on this day of 2000 between corporation and trustee of the employee, dated herein known as the trust, as the employee has been employed by the corporation since blank, whereas the corporation is willing to assist. So it's the same thing as Harbaugh. I believe it really helps for all kinds of loan for business purposes, such as rentals. For personal borrowing, it will be far less common. So I actually have a client who went to municipal credit union in New York City, and he asked them about using his life insurance as collateral. And then the bank teller sent him to the insurance guy. And the insurance guy was like, no, we don't do that here. And then he went to Chase Bank. And Chase Bank said, oh, no, you have to find out who your insurance carrier is and what bank they have a relationship with. So then I called my advanced markets team. And I called my advanced markets team and I recorded it. They did not know I was on the phone recording them, but I videotaped it and it's actually here on YouTube. The only reason it doesn't matter is because it's public information. This is knowledge that I feel the general public needs to know. I feel that a better educated client makes my job a hell of a lot easier. David, I hope you agree. But I think the client knowing a lot more about this makes it a lot easier. I don't need them to come to me and say, I know what everything is, but I need them to come to me and say, hey, can you tell me a little bit about this collateral assignment? Yes, I want to talk to you about life insurance, but I don't just want to get an IUL because I heard IUL. Can you talk to me about what other things life insurance can do for me? Because my big thing now, David, is I'm on a campaign against product pushers. I am now all these people on TikTok, YouTube, Facebook, Instagram, wherever, who are like, buy term, invest the difference. They're lying. Those guys on Facebook, YouTube, Instagram, wherever, who are like, whole life insurance only. IULs are trash, term is trash. They're lying to you. Those guys on social media who are like, IULs are the best thing ever. Don't get term life. Don't get whole life. Everything else is trash but an IUL. They're lying to you. The reality is we're licensed professionals. And as licensed professionals, we can sell you all of the above. So I don't care which product it is, because the IUL may be the best product on earth for this guy. And guess what? I'm an IUL guy. My favorite product is the IUL. If you had to ask me which I thought was the best product, I personally favor the IUL. I like the flexibilities of the premium and the flexibilities of the death benefit. I think that's the best bet. However, that's my opinion. That does not mean that that's what is best for the client, which is why it's very important for us to do fact finders, which is why I hope Regulation BI passes across the country, because I've had to deal with Regulation 187 in New York since 2018. And it makes a world of difference when you actually fact find. Number one, you get substantially larger cases. I'm not on your level yet, David, writing, $400,000 annual premiums, but I'm going to get there. Now, and this is how you do that, right? Stuff like split dollar, right? So, David and I had a conversation years ago where, we were talking about, something I'm passionate about, which is the Black community, right? I have no ill will against any other community. But yes, I'm going to have a soft spot in my heart for the Black community because I am Black. Right, so it kind of makes sense. You would have care for yourself. So, with that, okay, so 200,000. Listen, David is a heavy hitter. Don't let him downplay what he's doing. This guy is MDRT. I'm not gonna let you be modest, bro. No modesty around here. There's a rapper by the name of Meek Mill, right? You need to listen to a song he has called FBH, which stands for fuck being humble. You're a humble guy, I know, but listen, and he's a wealth of knowledge. I love the fact that he shares so much knowledge with us freely. And so that's what I like to do. I like to share knowledge freely. I've actually had people who have you're gonna start in on PPLI. Listen, bro, I like PPLI. Listen, I have clients who are taking advantage of, well, no, they're not really taking advantage of PPLI, because when I look at PPLI, I think of premium financing. But from my understanding, premium financing, to be eligible, you need to have a net worth of at least $10 million. So at least with one of my carriers, my major carrier, my favorite carrier, right? That's my go-to carrier. As brokers, we all have a go-to carrier. So my go-to carrier, they require a net worth of 10 million or more for premium finance. But I do have a premium finance case. He pulls $1 million a year. So, he's in the entertainment industry. But I'll talk to you about that offline. But so here's again another legal document for a collateral assignment. And as you see here again, right on Investopedia, right? I went to Google, can you use life insurance to buy a house? Life insurance can be used to buy a house. Offshore PPLI. David, what? Listen, are you talking, well, so I'm actually considering that, because I've been looking into getting licensed overseas. There are some people in other continents that have been talking to me about getting into insurance. The only way I've been able to push them is toward Lloyd's, because I know Lloyd's is global and they insure everything. But I don't know, maybe I'll put them, push them towards the giants. I know Hong Kong is big with Goldman. Goldman Sachs is huge in Japan. HSBC, they just sold a $250 million policy. Yeah, dude, I'd love to talk about that. So, and you could also use your life insurance to buy a car, to cover medical bills, or to pay for a vacation. Keep these strategies in mind if you own life insurance, right? So again, this ain't for me. I went to Google, and as you can see, it's Investopedia. Investopedia does not sell life insurance, do they? Last time that I checked, they didn't. Right? So let's continue. So another split dollar collateral assignment, right? Now, this is form number 10 of a collateral assignment, right? Now, these are specimen documents. So these are basically real life applicable situations. Thank you, Rye. I appreciate it. I know this lane is for me. The problem is Unfortunately, Rod, it seems like our community doesn't get the point, right? There's few of us, you, me, a lot of my followers, right? A lot of my subscribers who happen to be black kind of get the point. Actually, there's a lot more of us who get it than don't. The problem is that our representation is more that of those that don't. And when you look at math, there's approximately 200 million Americans who identify as white and approximately 42 million Americans who identify as black. So simply from logistics and math, there are going to be a lot of Americans who identify as white who don't normally encounter Americans who identify as black on a day-to-day basis. And so their only view or vision of black people is going to be what they consume in media and TV. And I'm not saying that that's always a bad thing, but there's usually not the greatest examples of black people on TV, right? Yeah, Kendrick Lamar and Drake, right? Or Future and Russell Wilson, right? Nobody knows Dennis Kimbrough. You know how many of the barbers looked up Alonzo Herndon, bro? That barbershop was open for 3 years. You know how many of the barbers talk to me? I listen. I know now why the colors of the barber pole are the colors of the barber pole. They used to be called barber surgeons, but none of them know who Alonzo Herndon is, or the fact that being a barber, they could have made a killing also selling life insurance, because you build trust with your clients while they're sitting in your barber chair and you have a razor to their neck. So you can talk about them. Man, what if something happened and I slipped on this blade and you died? Would your family have enough money? Or what if I nicked you and you couldn't go back to work? Right? So, I do get frustrated, but I can't make it seem like it's that bleak, especially with things like the internet, because what has to happen is we're not a monolith, right? And there are people like David who care about us. Sue the bar. Well, that barber better have some good property and casualty insurance. He better have a renter's insurance policy with a good liability. I was also trying to sell them renter's insurance and explain to them, listen, you are renting a booth. You need a separate renter's insurance policy. Right? Well, people like David are what we would call allies, right? Like he, I gotta talk like Gary V, right? I curse and shit, right? He gives a fuck about the community, right? Because he gives a fuck about people. He's a humanitarian. I got another buddy like that by the name of James. He and I fucking, we clash back and forth all the time because I'm right leaning. So he, and I talk a lot of shit about black people, so he thinks I'm a self-hating racist. But we're friends since high school. He's white, by the way. But it is what it is. I still got love for the guy, just like he even though he thinks what he thinks, he will fight for my right to think what I think. And I will fight for his right to think what he thinks. So let's get back to this collateral assignment. So A, for value received, the undersigned hereby assign, transfer, and set over to blank or blank its successors and assignees, herein called the assignee, policy number 12345, issued by blank insurance company, herein called, we'll call this Alonzo Hall Insurance, called the insurer, and any supplementary contracts issued in connection there within. So the reason they say any supplementary contracts is because, again, most insurance agents, if you have a traditional dividend-paying whole life insurance policy, most insurance agents don't ask you how you want your dividend. They just automatically set up to go and pay for reduced paid-up insurance. Yes, David, I am exposing the secrets. Most agents just give you reduced paid-up. They don't take the option to give you a dividend. Why is that? You know what, David? I don't want you to answer that question here. I'd like you to review some of my stuff sometimes from when I do go live and I talk all this craziness, right? And bring that up as a topic. What is it about those different dividend options? Or can you know what? Here's what I'd like for you to do on the Financial Advocacy Podcast. And this is as a financial advisor, because this will make us as financial advisors better as advisors. My phone's ringing here. Who's calling me? Hold on. This is my mother. Yes, mother.
Afternoon, Governor.
Afternoon. I'm live on YouTube. You can watch in.
I had a question about Jocelyn's insurance thing, so call me later.
Okay.
All right.
Tune in.
All
right, later. Sorry about that, y'all. That was my mother. You know, gotta answer the phone for the mother, right? Give me 1 second here. Let me just answer the question.
I was trying to figure that out. Thank you. And I'm still gonna call you later about Jocelyn's thing.
That's what I was gonna say. Just what's the question?
Okay. Am I supposed to be paying you, or are they taking a draft out of my checking account?
No, you never paid the person when you pay for insurance.
Yeah, I know, but if you were gonna put it in for me, blah blah blah.
No. I have your account information from your annuity.
Okay, I saw that on the thing that I signed. So they're gonna take it right from my checking account every month.
Yes.
Okay, so we're all set. I don't have to give you anything as long as I got that there for them to take that draft, and I can look at the paperwork as to when that's going to happen, right?
Yes.
Okay, thank you.
All right, and go ahead and click that link, and that'll bring you directly to the live.
Wonderful, thank you.
Love you later.
Love you
All
later.
right, sorry about that, y'all. Gotta answer the mother, right? Let's see. Give me 1 second. I just just did this webinar last week. Okay, I will check that out, David. Okay, cool. So, a lot of agents, like I said, if you will do something that speaks to why the features and benefits of each, right? So, what's the features and benefits of reduced paid up, or of receiving the cash benefit, or the different options that are available with the dividend that generally we're from Connecticut, that generally most agents don't go into because they don't understand. A lot of people create IULs and they create them terribly and illustrate them terribly because they don't understand how to manipulate the software. And so if you don't understand how to manipulate the software, you don't understand how to manipulate the product. I have an agent right now who keeps calling me and is like, hey, I need a quote. And I'm like, we don't do quotes. We do illustrations. Number one. Number two, did you do a fact finder with this person? No, but I know him and his money. And I was like, with that, I don't care about you knowing him. You don't know his financial situation. You know what he's told you about his money while y'all are friends. That's a completely different thing than you sitting down as his financial professional and talking to him about his money. We can review that in our reference, the tools and techniques of life insurance textbook. Yeah, that would be awesome, David. I cannot wait. Like I said, the greats, we don't compete, we collaborate, right? David and I should technically be competing. Then again, he's got a group with thousands of other insurance agents that he should be competing with, that he gives ass loads of information to for free, right? All because he cares about the clients, right? And he can't serve everybody as a client, and not everybody is going, just like like I said, I curse, I spit, I listen to gangster rap, right? That's going to turn some people off. Some people will never do business with me because they will be like, that guy curses, spits, and listens to gangster rap. I do not want to have anything to do with him. So with that, I know I can't reach everybody. David doesn't curse or spit. Maybe he listens to a little gangster rap. Hey, I don't know. But right? He's maybe more absorbable for someone, right? But he understands that, hey, I can't reach everybody. The people who like cursing, spitting, and gangster rap are gonna go see Alonzo because that's what they like to hear, right? At the end of the day, I need to make sure him as a financial professional is giving them as the client the best service possible. So when he comes here in this arena with financial professionals, like we do in the Breakaway League, we learn about concepts that the average agent doesn't learn about. Not to toot my own horn, but a lot of this stuff I learned self-taught. And yeah, this is true too. Every time I do share, I do learn things a bit better. Because then I learned some more ins and outs. Like I said, I had a client who went to Chase Bank after he went to the municipal credit union, and they told him, but he was trying to get a personal loan, not a mortgage or an auto loan. Because clearly here it says you can use it to get an auto loan or a mortgage, right? It clearly says that, right? So this is one collateral assignment, right? Now I want to show you guys, because I have the actual document. I might need to sign back here. So this is an assignment of a life insurance policy. This is the actual document, right? So it's PDF fillable, as you can see, right? It's PDF fillable, right? So this here is a let me just check in the comments for a second. Yeah, I agree with you, David. And ladies and gentlemen, if you're enjoying the content, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. So as we proceed to give you what you need. So there's a shit ton of specimen documents. Now here's what's crazy. This particular carrier, David, gives us all these resources as an agent for free. There's another broker dealer that I affiliate with the initials MM that oh shit, I guess I just gave away who this carrier is, huh? But if you have to pay for these resources with this with that other carrier with the initials MM. So here's a charitable remainder trust specimen, right? A testamentary trust, an inter vivos trust, right? For charitable planning, 403B language used by a public school, key employee insurance. But let's get back to this collateral assignment, because that's what I wanted to talk about. Because again, life insurance is an asset. It's not an investment, right? So these are different things. Let's see. Let's go back to Google. Can I buy a car using life insurance? Can you get life insurance? Well, no, you can't get life. How to cash out a life insurance policy? No. Can I use my life insurance to buy a car? You want to avoid loan restrictions. There are no restrictions on how you can spend the money, and you can use it to pay for anything you want. So, great way to build credit for your kids. Instead of just putting $100 a month away in Chase Bank. Put $100 a month away in a life insurance policy, a cash value life insurance policy. Make sure you don't do things like term to perm, which generally are things like the Gerber Life Grow Up Plan. So things like the Gerber Life Grow Up Plan are a term to perm or a juvenile policy. Even if you get a juvenile policy, you want to make sure this is cash value accumulating from day one. Again, you want to ask your insurance professional, your financial advisor, the hardball questions. People like me and David are out there to tell you to do that. Are they going to get frustrated and pissed off at you for asking these questions? Maybe if you ask them 1,000 times, or maybe if they don't know the answer. But people like me and David, we will. Right? So that's just kind of how that works. Right? So you can use your life insurance. How do I turn life insurance into cash? So there are several ways you can use the cash value from your life insurance policy while you're still alive. Right? Borrow from your policy, withdraw from your policy, surrender your policy, pay policy premiums using your cash value, right? So this is why 99% of term insurance doesn't pay out, because you end up lapsing on the policy. But so again, collateral assignment paperwork. This is actual paperwork from an actual insurance company. You got that juvenile life insurance policy, huh? Speaking of, I need to check my email because I should have a response. Why have they not responded to me about? All right, I gotta check why they haven't responded, because this should be in here. So let's actually look at that juvenile life insurance. So here we go. New York Life juvenile life insurance explained. Regardless of your life insurance for kids, let's accept the cookies. Regardless of your family's financial situation, gifting life insurance is a great way to show your children or grandchildren just how much they mean to you. It's a gift that can last a lifetime. Like I said, instead of putting $100 a month away in Chase Bank, put it onto a child, right? That child, over the course of 20 years, will have, tens of thousands of dollars. Guaranteed. Right? How does it work? How does child life insurance works? When a minor child or grandchild is insured, the policyholder is generally the purchasing adult. The beneficiary is generally the parent or guardian, and the insured is the child. When the child reaches the age of majority defined by state law, which is usually 18, ownership of the policy can be transferred to the child. At that point, the child can select the beneficiary. You can choose how to pay your policy, right? But you should absolutely get life insurance on your child. You got that juvenile life insurance policy, huh? Right? So these are some specimens, right? Like I said, this particular carrier is offering us a boatload of stuff for free. I can't get into the FINRA. Can I get into the FINRA stuff? I'm not going to really. Yeah, okay. So I'm not going to go into the FINRA stuff. They got tools and calculators. They got a 529 college expense plan analyzer. Let's check that out. You a paper chaser? You got the block on fire? Get that insurance pack and retire. Oh, it's not letting me onto the FINRA stuff. Let's see. It'll let me on the broker check. I'll bet you that. Yeah, let me on the broker check, you beasters. Let's see. Can I create a watch list? I can create a FINRA watch list, so you can add a ticker symbol. Like, let's go KO, which is Coca-Cola. right? So KO, Coca-Cola, right? And you can actually just type in letters and get your different funds in here. You can get mutual funds, right? So you can actually go to finra.org and get this stuff, right? You can go right to FINRA and get this, right? So if you'll see, like I said, my watch list would be Coca-Cola. Now there's two different codes. You can go KO or COKE, right? Which is Coca-Cola. It used to be Coke bottling, but now it's Coca-Cola Consolidated. And that's on the NASDAQ, right? Or KO, right? Which is Coca-Cola Company, right? And they're on a different, what are they on? They're on the nice. All right, so let's go back here. Where was I? Watch list. Can't go back. Okay, that's why. Equities and options. So you can actually look at the equities and options here. So all this stuff, this is actual investment stuff. So I'm not gonna talk about this stuff too much because law, right? Again, one thing you do want to know about Howard is broker check. For example, you can put an agent's name in here. Let's say you want to look at an individual and see what licenses they've gone for or not. You can type in their name and you can type in their city, state, or zip. So I put in my name, New Haven, Connecticut. No results found. Let's see. Right? Oh, it doesn't include the previous firm. So you can go to broker check and actually look up a broker. Right? Protect your money. Prepare to invest. Okay, so FINRA screwed up here. Their page ain't working. So let's look at types of investments. So again, this is from FINRA. But it takes you directly to the FINRA page. So this is all regulated stuff. This is all stuff you can look at yourself because it's public information. So instead of watching Stock Mo, just go to FINRA and type in Market List or Market Watch, right? But so investment products. The landscape of investment products is broad and extends well beyond stocks, bonds, and mutual funds, which are familiar to many investors. The section below provides an overview of major investment categories, those that have been around for decades and some that are emerging. Hey, David, if you're still there, I'd like to, you know what? I'm going to PM you on that one. Yeah, because that's a cool one, right? So, the section below is those that have been around for decades, right? So, each section provides an introduction to the investment, explains the type of investments you may come across, and lays out important risks. Along the way, you'll learn how these products are bought and sold, and find tools and resources to help you become a better informed investor. So let's look. So they have alternative and emerging products, right? So essentials. Alternative and emerging investment products tend to be inherently complex because they often involve novel, complicated, or intricate features that can make them hard to understand and evaluate. Uh, what is it? Multiple. 1 second here. So these products often come with unique risks, although this doesn't always translate into more risk. For instance, while the performance of some products, leverage products in particular, might result in dramatic declines or the complete loss of your investment. Other products can help limit risk through protection against loss of principal. Let me check some of the comments here. And he says, man, I love this shit, bro. I'm glad you love it, man. We got 7 in the box. Ladies and gentlemen, make sure you hit the like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. I don't even have the Cash App across the bottom. Let me put the Cash App across the bottom like everybody else, right? Gotta be a capitalist at the end of the day. Yeah. So, excuse me, goals associated with these investments are not always performance driven. For example, a goal might be to limit loss or smooth volatility rather than to generate a return. Avoid concentration of alternative and emerging products. They tend to be used to supplement traditional investments, not replace them, right? So there's a bunch of alternatives, right? So now let's look at futures and commodities, right? So futures and commodities, the essentials. I'm just going to read the essentials of all these things. So commodities are basic goods such as wheat, gold, oil, and cattle. Commodities can help diversify an investment portfolio, but might not be suitable for all investors. It's important to understand the products and markets before investing. Investing in commodities can involve getting direct exposure to a commodity, like holding an actual physical good like gold, or investing in commodity futures contracts, which are legally binding agreements to buy or sell a particular commodity at a future date for a fixed price and quantity. Commodity mutual funds and ETPs can provide another more accessible way to invest in or get exposure to commodities and commodity related businesses without having to accommodate such factors as physical delivery or storage. So, not to toot my own horn, but Prince Nashim, what's going on, brother? Let me see. You don't have a wrench yet, do you? Let me get you a wrench in the building, man. You gotta get on this YouTube shit, bro. All right, now you're a moderator. So, um, for example, this is why, not to toot my own horn, but toot, right? So shit like me working in New York, one of my next door neighbors, Prince Nasheen, the dude who lived when I lived on where I'm at. The dude lived right next door to me, right? With the wife with the black Benz. She had the GLK and traded it in for the C class, right? Um, even though I have a black Benz too. But he worked for Citibank selling derivatives for 11 years and commodities. 2 of his clients were Victoria's Secret and Walmart. So when I come to, again, the black community and I be like, hey, I work in financial services, and you ask me how many clients I have, that's not what you mean to ask me. You mean to ask me, what's your assets under management? Because a person like him had only 2 clients, but the size of his clients is more than most people will ever see in their life financially. It was enough to carry his career for 11 years, right? So commodity mutual funds and ETPs can provide another more accessible way to invest. Commodity investments might offer leverage, which can amplify the risk of significant gains or losses, and the leverage or inverse exposure offered by some commodity future linked ETPs can pose significant additional risks. Again, I'm just reading the basics. So insurance, before I continue with reading the insurance, again, these are alternative investments. I'm not saying this. This is FINRA. Okay, so sometimes you gotta toot your own horn, right? So let me toot my horn a little bit here. You can't see it. Let me turn off my background screen. Right? So this, wow, it's still hard to see. So this is for 2023, right? Here, wow. Here we go. Right? Top insurance producer, Alonzo Hall, right? For 2023. There we go. Top life insurance producer for 2023, right? So, continuing, right? So, let's go back to sharing the screen here with you guys. All right. So, let's see what it says. Essentials. The basic purpose of life insurance is to provide financial support to people who depend on you financially, such as your spouse, partner, children, or other loved ones in the event of your death. Now, Prince Nasheen, if you guys don't know, now that you have a wrench, Prince Nasheen, you can put links in the chat. So I was on Prince Nasheen's live TikTok, and that's one of the things I said. The major aspect of life insurance, or the major purpose of life insurance, is the death benefit. Don't let nobody tell you anything different, including me. Many types of life insurance are available. Key features to consider include the length of coverage, whether you pay fixed or variable premiums, how benefits are determined, and cost of coverage. While some policies offer relatively straightforward with fixed premiums and benefit amounts, others are more complex. Variable life insurance, for example, allows you to choose among investment options, offering the potential to build value, but usually at the higher cost and, like all investments, with risk. Regulation of life insurance varies. Term and whole life insurance policies are regulated by state insurance commissioners. However, some life insurance policies are considered securities, which means the contracts must be registered with the Securities and Exchange Commission, SEC, and sales are regulated by FINRA, which is why they brought you to FINRA for insurance. Business connections, what's going on, bro? So, let's look at this next thing, right? Annuities. So, I'm going to showboat again while I'm at it, right? Let's showboat one more time. Right? So, this is top annuity producer. Let me see if I can put my phone behind it. Maybe that'll let y'all see it. All right, let me move it back. So, top annuity producer for 2021, right? I'm going to put that here. And then we have top annuity producer for 2022, right? I'm going to put that here. And then we have top annuity producer for 2023, right? I'm going to put that there. So I only won top life insurance producer for 2023 so far. But that's soon to change. I'm going to keep that going. Right? I'm going to Hawaii this year, bro. Right? So now let's look at, he says you're showing off, huh? Yeah, I'm showing off. Right? But there's a reason. So back to this. Right? So annuities from, right? This is FINRA. FINRA.org/investors/investment-products/annuities. So essentials. Annuities, which are contracts with insurance companies, are products that investors might consider when planning for retirement or seeking to turn assets into a stream of income. Money invested in annuities rolls on a tax-deferred basis. While all annuities are regulated by state insurance commissioners, variable annuities are registered index-linked annuities, or RILAs, are also regulated at the national level by the U.S. Securities and Exchange Commission, SEC, and FINRA. Annuities may be either immediate or deferred depending on when you start receiving payments. I actually spoke about this yesterday as the annuity anarchist. I might bring my annuity anarchist videos back. Ironically enough, when I started doing the annuity anarchist, that's the year I won the annuity award for the first time in 2021. The different types of annuities, fixed, variable, and indexed, come with different risks and potential rewards. Take time to learn the differences and compare annuities to other retirement savings vehicles to determine what will best meet your needs. Annuities are complex and can be costly. Make sure you understand all the fees, expenses, charges, and any features or added benefits, often sold as riders at an additional cost, before making a purchase. Variable annuities can feature surrender periods of 8 years or more. During this time, you can be assessed penalties if you liquidate your annuity. Therefore, you should give careful consideration to how much of your funds are concentrated in the investment and your need for liquidity during the surrender period. So, like I said, ladies and he said, show off, please. Thank you, bro. I got a lot of people like you, and I got clients. Like I said, my biggest client who put $750,000 away in an annuity with me. He said, yo, man, I like when you get on here and you start talking that gangster shit, man. You start cursing people out and telling them about themselves, man, because he's black. He's like, yo, man, niggas be talking about this shiny belt buckle shit. And like I said, to those who aren't black, who may get offended by the N-word, please don't. Black folks gonna be upset with me about this. But the N-word, nigga, is not, it's that it's a term of endearment. It's not. But it means person, right? We just use it's an acronym, it's a filler, and it means person, right? Now, am I saying that you should go around saying it? No, because some people are still ignorant or offended by it. And if you are offended by it, white, black, or otherwise, please don't be offended by it. I'm not offended by it. I use the word. So, bank product. Banks, savings associations, and credit unions offer such products as savings and checking account, money market deposit accounts, and certificates of deposit. Deposits at banks and savings associations are protected by FDIC. At credit unions, deposits are protected by the NCUA, National Credit Union Association. So you guys can say I can never get with it. At least as a melanin-impaired person. Hey, Anya, what's going on? David, that's cool. I'll say it for you. Like I said, just know that it means person. Obviously there's context by it, but for most part, it means person. People just take it out of context, right? So one thing that gets to me though is why people shy away from life insurance, but they would never go to a bank that doesn't have FDIC, Federal Deposit Insurance. So, and theirs is only up to $250,000. But we all talk generational wealth. So bank products are typically lower risk, but also provide lower interest rates than other investment options. Savings held in bank and money market accounts are readily available, offering a way to save money and still have easy access to deposited funds. CDs are useful additions to most investment portfolios because they offer safety and a predictable return. Mutual funds. So, a common type of investment company, mutual funds are open-end funds, meaning that investors can purchase and redeem shares in the funds on a daily basis on the NAV, the net asset value of their shares. Mutual funds pool the money of many investors to purchase a range of securities to meet specified objectives such as growth, income, or both. Mutual funds can offer cost-effective diversification. Each mutual fund has different investment objectives. Some funds invest in a particular product, such as stocks or bonds. Some funds focus on a particular industry or region, and others seek to replace a market index. All mutual funds have fees and expenses. Use FINRA's Fund Analyzer to analyze and compare the costs of owning specific funds. A mutual fund may have different share classes with different costs. Your investment professional might receive higher or lower commissions or payments on the sale of one share class relative to another. So let's pause right there. Why do you think it is that a lot of these buy term invest the difference people would rather you invest than put your money in life insurance? Because they're always talking about, well, why do you think those whole life guys? Because of these exorbitant commissions. As if they're not going to get an exorbitant commission on you paying on a term insurance policy. See, what they don't tell you is when they're saying buy term, invest the difference assumes that you can afford an investment, which is $10,000, which breaks down to $834 a month. So you're spending probably $500-$600 a month anyway on your term life insurance policy. So at minimum, the insurance agent, whether it's whole life, term life, or universal life, is getting paid 50% on what you pay into the policy for the year, unless they're with Primerica. With Primerica, they're going to start at 25% until they recruit 3 other SAPs, and then they'll go up to 75% until they become a, I love using the term Grand Wizard because it's a KKK term, but when they become the Grand Wizard, and they they get a free BMW, right? I don't dislike anybody's right to exist. And one thing that the leader of the KKK said some years ago was he's pro-white, he's not anti-anything. So how can I be upset at him for that, right? I am an unorthodox person, yo. So it's important to read a mutual fund's prospectuses to learn about its objectives, investments, and strategies and costs. So really quick, that's really important as well, right? Where do they have the prospectuses? Now let me just do it like this. Let me close this. Pop it up here. Right? Because we have our prospectuses. So when people are like, hey, I'm going to show you a closed fund prospectus. I can show you an open. Let's look at our variable. Let's look at our VU. No, I don't like VULs. Let's look at our variable annuity prospectus. Right? So this is going to tell you the direction of the annuity. This is as of May 1, 2024. Right? So, as a new investor that has your table of contents, your key information, it'll bring you right here, your fee tables. So it'll bring you to the fees, right? Your sales load, there's a 0 sales load. There's a 5% sales load on a mutual fund that you purchase from Primerica. But do you even know that? Do you even know to ask that? Charges and fees are fully explained in the charges section. So there's a fee of $14 per wire transfer. There's a $10 fee for exchange. Deferred sales loader surrender charge of 8%. There's a 3.5% fee on taxes, right? Annual policy expenses, right? So this will show you the performance of your investment. It'll also show you past performance. It'll show you fees. It'll show you charges. Whoever's managing it, what they're getting, terms and conditions, the direction that it's going, who you are. It'll give you the explanation of everything. So next time somebody tells you buy term, invest the difference, ask for a prospectus. That's what people are telling you. You know what, David? Right? Just like the M word, we can say it, but supposedly you can't. Well, real financial professionals, we can say prospectus. Those fake guys can't. Because we can share a prospectus if a client asks for one. Right? So these are prospectuses, right? So again, and these are open funds. I'll look at a closed fund here. Right? So this is from May 7th, May of 2007. Right? So the type of investment and objective, it seeks a high level of current income while also considering growth of capital. Portfolio company and advisor / sub-advisors. Fidelity VIP High Income Portfolio Service Class 2. Fidelity Management and Research Company LLC. Other investment advisors serve as sub-investment advisors to the fund. Like I said, this is the information that you get on a prospectus. Ask your buy-term invest guy for a prospectus. Ask him not just for it, ask him, can he review the prospectus with you? Right? Because they like to talk all that potty mouth. Babe, what you want to eat? I'm hungry. I have bourgeois taste buds. I want to order something. Seeks long-term capital growth. FTVIPT Templeton Forum. So this was with Franklin Templeton Investments. Franklin Templeton Foreign, TVIPT. So Templeton Foreign VIP Fund. Class 2. Templeton Investment Council. Seeks Capital Appreciation. Investco VI Capital Appreciation Fund. Series 1. Investco Advisor. Investco VI Discovery Midcap. Seeks total return. Investco VI Global Strategic Fund. All right? So I'm not going to go all through all this all day. Because also I'm not going to go through explaining this shit. Sit down and have a prospectus, a consult with me, and we'll go through it. Right? But these are just some of the, I can pull up financial workbooks. Right? Let's do a financial workbook for you. Right? Let's do business disposition. So in the event of your death, right? Business disposition. So this is presented by me, Alonzo Hall. Prepared for Rael's business. Right? Let's do Rael's logistics. Because I know a little bit about what we got going on. Right? So, this is shit that LLC Twitter, again, Black America, y'all motherfuckers go online all day. And because I see it. Because I got folks who come on TikTok and Instagram and all that shit. Oh, start your business, get an LLC, and you can get $150,000 of business credit. No financial advisor would tell you to do that. Right? And shout out to Rael and shout out to Business Connections, because y'all two are part of the reason that I am going to start charging a fee for some of my webinars. Or I keep saying that. I done been saying that for months and ain't charged a fee. But one day I'm going to charge a fee. So, in the event of your death, do you want your business interest to be A, retained for your family, B, sold, or C, liquidated? Right? You might want it liquidated and sold. Maybe you have just business interest and you're in a partnership. Maybe me and Rael and some of the other folks that we've been speaking to behind the scenes all came together, started a business. And he's like, look, when this shit is done, if I die during this business, I don't want my daughter to have to deal with you niggas. So, and nothing against y'all, but, this was my dream. This wasn't hers. So she's not going to want to deal with y'all. Y'all are my brothers, not hers. Cool. All right. So what we want to do is I want to sell my businesses. I want to liquidate my interest. I want to sell it off so that Rael and the other brother get the rest of the interest in my business, and they give my daughter a big ass check. But they maintain interest in the business. Right? That would be C, liquidated. B, sold. Do I want to sell it to motherfucking Kraft? Right? And let a conglomerate take over my share? And then maybe buy the other people out of the business? Or do I want to say, hey, I want my kids to keep this business? Right? This is part of starting your business plan. This is part of why I charge a $300 fee for sitting down with me. Family retention. How is your business interest to be transferred? By will at death, by gift during life, by sale during life, or at death. Who is to receive your business interest? The person in my will. Right? That's if it's family retention. B, sold. So whom is your business interest to be sold? Do you have a written buy-sell agreement? If yes, where is the agreement kept? If yes, is the plan funded with life insurance? If yes, where are the policies kept? C, liquidated. How do you make provisions to avoid forced liquidations? Have you? C, if yes, how have those plans been made? Simple one pager, but you're learning how to dispose of your business, right? Let's look at the insurance inventory. So you should have an inventory of your insurance and annuity policies. This is a 17-page document, so I'm gonna go through the whole thing like lightning fast. So table of contents: life insurance, permanent life insurance, term life insurance, disability insurance, health care, long-term care, critical illness, annuities, immediate, annuities, installment deferred, annuities, single premium deferred, property and casualty and homeowners, property and casualty auto, property and casualty other, right? A balance sheet. So you can actually do a balance sheet with me, right? But we can set up, an inventory on your bank and brokerage accounts. You want to specifically inventory just your life insurance? We can look at what company you got it with, what policy number, who's the agent, what type it is, the death benefit, how much you paying, the cash value as of date, any loans, who's the policy owner, who's the beneficiary, where you keep it. 4 or 5 policies, right? Term insurance, same thing, right? You want to keep a documented list of your advisors. Who's your attorney? Who's your accountant? Who's your life insurance agent? Who's your car insurance agent? Who's your stockbroker? Who's your financial planner? Who's your trust officer? Right? We've also got a full fillable workbook. I think some of this stuff I'll start giving out when you guys come to my webinars. Right? Because this stuff is all paid for. Funeral instructions. Funeral instructions presented by Prepared For. So you can already have, if you want to shortcut the will, you can have at least instructions for your funeral. So you can say, I have it here, boom, here's what I want, 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 here's what I want to wear, here's where I want it, here's who I want doing it, here's who I want as my pallbearers. I want an African wedding, I want them playing Ungawa Black Power and all that bullshit. I want them to dance I want them to do the wobble. I want my ashes spread over here. I want this. I want donations in lieu of flowers. Right? So anyway, ladies and gentlemen, I just wanted to show you life insurance is not an investment. It's an asset. Right? And I just showed you, let's do a couple of financial calculators with you guys. So I have a way to show you how to get a cool million. Right? So as you see here, what might it take to save $1 million? This financial calculator helps you find out. Enter in your current savings plan and graphically view your financial results for each year until you retire. Press the full report button for a report that helps you see when you might hit your cool million and what you might be able to do to possibly achieve this goal. So let's say I'm 40. I want to get to $1 million by 60, right? Let's say I currently have 5,000 invested, which is more than most Americans have. Let's say I'm saving 500 a month, which is more than most Americans are doing. Let's say the expected rate of inflation is rate of return is 7%, and this had 3% inflation. I actually added it to 6% because that's close to what's realistically happening. So even though I plan on being a millionaire at 40, at 60, with this plan, it's going to take me almost 40 years. After inflation, I'll be 76. So if I view the report, my current age with the values that I input, I'd have to change my monthly savings to damn near $2,000 a month. And my current amount that's currently already invested to damn near $200,000 and receive a rate of 17% to reach my target $1 million by age 60. So I think what I'm going to do to be a better financial advisor is when I sit down with a lot of you folks, I'm going to actually pull this calculator out and be like, okay, so you want to reach X age by X. Now you're not getting life insurance. You have crypto, right? So let's go look at this crypto that you've got. You've got how much in crypto? Okay, so let's see. You're 36. Okay, your target age is, you're going to retire by 60. You're going to have $1 million by then. How much do you have invested? Okay, you got $5,000. Let's say at 36, you're saving $500 a month. Let's calculate. You'd be 72, not 60 at that rate. And most people aren't actually saving that. Most people are like $150, and usually they have zero invested, right? Let's be real, right? So we review the report. They need to receive a rate of return of 21% plus an annual rate of return of 21% plus their current monthly savings would have to be $1,380.61. But I want to show you something else. Adjusted for 6% annual inflation, at age 90, $1 million would be worth $43,000. Whoa. Whoa. At any rate, I'm probably going to get cut off, but I'm going to play my song. So, ladies and gentlemen, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, your social media insurance broker. And I've returned today to whap and tap on your head with another ADH wealth solution. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. With that being said, ladies and gentlemen, wipe ass. Work in progress every day and see success. Actually, I'm not going to do that song because even though I like that song, I don't want to get copyright struck again. So, wipe ass, work in progress every day and see success. And remember, folks, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.